My co-authors and I became interested in the studies, I guess a few years ago, that we've always been interested in the mechanism through which information is impounded into security prices, in particular stock prices. On the other hand, we also noticed that every time we would go to a conference or there will be a meeting about academics or other people on Wall Street, there's a tendency of, kind of like the first question that people ask you, where did you go to school, or did you know such and such? So we had this idea that the social networks were actually some important in putting people together, and so we thought there could be a valuable mechanism through which information can travel across people and then from people into actual stock prices. The main objectives of the study is to test whether or not social networks help the transfer of information, either private or public information, into security prices, whether or not the fact that people are connected through a variety of relationships helps them gather information and make better trading decisions. In particular, what we like to test is whether or not when you have money managers that have to pick stocks that are connected to the companies that they choose and hold in their portfolio, whether or not being connected to someone either on the board of directors or some senior officers of the firm, the CEO, the CFO, or the chairman of the board, helps them make better investment decisions, help them pick better stocks. In terms of the relevance of this topic, social networks that has been gathering importance throughout a variety of aspects of our life. Just if you look at the rise on all these social network sites, both for, I would say, for just casual reasons such as friends, or both for professional reasons. There's all the social networks that link professionals for which you can look at your classmate, and so they tend to be they're becoming much more and more important in the way that we share information and in the way we relate to other people. So this is the first study that looks at whether or not there's an impact in financial markets. So we all had this idea, especially on Wall Street, that social networks are important, but this is the very first study that actually we can put a number on it, that we really show how valuable is it to be in a particular network. This is a specific network, that is our school network. There's many other networks, but this is the first study that can pin down exactly how valuable is it, if it has any value, to be connected into a particular network, and how can we actually quantify it, in this case through the returns on this investment that these portfolio managers make. So the main findings of our study is that when a money manager has a shared educational connection with some senior officer or a particular firm that he holds in his portfolio, he does very good on this investment as opposed to other firms. What was surprising about this result was the magnitude. When we went into the study, we have the hypothesis that we believe that being connected to a particular officer of the firm allows you to make better decisions, either because you have access to information, it will be a lot easier for you to gather some information about a particular firm, or because you know the type of the managers. If you went to school with someone, you know whether or not he's a good manager, so we have a better idea whether or not he has particular skill. What we were surprised about is the magnitude. The returns on these connected investments are very large, in the range to between 4 and 8% a year. Then in the mutual fund world is a very big number. So we were not surprised about the sign of the effect. We were surprised about the magnitude. We all thought they were important, but we didn't think that the social networks were that important in terms of stock returns or portfolio returns. One interpretation is, if you share an educational connection with a senior officer of a firm, you're better at judging his type. And so if I went to school with a particular CEO, I know better whether or not he's a skilled guy, whether or not he's not particularly bright, or whether or not other aspects of his personal type that are not available to everybody else. Another I would call that a good interpretation. A bad interpretation of our result is that there is sharing of information. That is, the fact that I'm connected to someone on the board of directors allows me to gather information that other people can gather because they don't have this connection. The second case, it's a sort of insider trading, and in particular case, it could be legal. We don't have any evidence that it's one versus the other, so the interpretation is left to the reader. In our personal experience, we have examples of both, and this for little anecdotal evidence. We've been approached by people that told us that they have indeed had higher return on investment of somebody they went to school with just because they knew was a particularly bright person, they knew it was a particularly intelligent person. So that could be, but we don't have any evidence of the opposite, that is that there has been some illegal sharing of inside information. So our work fits more generally in the initiative of global marketing, is that we are interested in the functioning of financial market. How does the financial market really works, and how is that information propagates through financial market? As I said before, we don't really know much about this. We have an underlying idea that something that is good news about IBM means that IBM prices has to rise, but exactly what causes us to rise, we don't know it yet. And that kind of, this is not the whole puzzle, but it kind of helps us understanding it a little bit through this social network. There's people counts, and and we believe that that's a very important part of global, domestic and global financial markets. My co-authors and I are working on an extension on the same idea on social network and financial market. And we have an extension that looks at sell-side security analysts. So analysts that issue buy and sell recommendation, and we would like to see whether or not these effects that we see in the mutual fund industry, whereas if you are connected, you tend to have better portfolio decision, also spill over to the sell-side analyst industry, where sell-side analysts will produce buy and sell recommendation, and as a preliminary result, we have found that analysts that are, say, connected or they share some education with the stocks they are following do tend to do better recommendations, in the sense that for an investor that will follow this recommendation, it means higher subsequent returns after a buy recommendation, for example. And so we're trying to extend this idea that social networks are important. We have shown already they are important on a buy side, mutual fund and active money management. We want to show that they're important on the sell side. So those are analysts whose job is to provide information to investors, to publish reports. And then we're also looking at possible interaction among the two. So we're looking at whether or not we have firms that are connected to a particular security analyst who is connected to a particular mutual fund managers. We try to trace whether or not we can reconstruct these links through the trading decision of the mutual fund to see whether or not a mutual fund uses the analyst as a vehicle to access information about underlying firms.